Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with the gold market. So gold market stands on actually unprecedented pressure and stands as a miserable sell-off right now. We have explained already a few times why it is happening. It's not related to valuation, value of the gold. It's just investors need cash to fulfill their obligations with the bonds that they have. So yeah, they have to fulfill the funds if they keep some collateral where the margin starts dropping because of the dropping in value of the United States bonds. So as you know, the majority of the debt in the world is denominated in United States dollars, and 70% of this debt in the floating rate. So and it's used, the bonds are used everywhere as a collateral or some providing of the margin or something of that sort. And when just to keep these positions, investors have to add more cash, and to get this cash they have to sell other assets, and this is happening with the gold in particular. So that's why this is not just devaluation of the gold. As we said, currently the action stands so strong that we probably will have to increase the scale for trading, and right now it's almost nothing to watch on a lower time frame, such as on a 4-hour time frame chart, for example. And we need to take a look at a bit larger time frames. Particularly speaking, this is mostly a weekly chart, but I have tried to put the information that we discussed on the weekly on the daily chart. We have this large ABCD pattern. Market is coming to the OP. It's around 1804, and it creates an agreement with the weekly support 1917.92. So actually the same picture I have shown you in the weekend. It looks like just a bit different on the weekly chart. Let's take a look that right in these areas also will be the weekly oversold, which is really, well, additional supportive factor around this area. So the major logic currently, guys, so if you would like to take a long position or do something on a daily chart, it would be better to wait and do nothing right now, because it's really very small distance until this target. Market now is turning to some significant volatility areas just because it's support, target, oversold on the daily, oversold on the weekly, and here's might be some really choppy action around it. So although despite that the technical factors right now is taking the backseat, is more gold market right now is mostly driving by the fundamentals, still some volatility could rise, and just to not be simply washed out regularly and getting some whipsaw action, it would be better to not consider right now taking the new shorts position. As the market is coming to the strong support, I would suggest that it would be better to wait when the market will touch this area, and if we will get some prominent bounce here, to consider taking the new short position. Here probably we also will get some kind of nicely looking Brent bar or something that sort. And currently trying to dive in all this mess that might be around 18 even, well, I do not see any attractiveness of that. So my suggestion, it's just personal view, that for any position on a daily chart, it will be better to wait when the market will touch the support and then take position on some bounce. The only thing that you could consider for trading, it's a trading on the intraday charts. On the 4-hour time frame chart, we see nothing really special, the market just going down. But on the hourly chart, if market will be able to show some minor bounce, maybe you could try to consider some patterns that might be formed on the hourly chart. But personally, I really have big doubts that market will show the pullback to the 1840 before it will complete the major target. Taking in consideration how it relates to the oversold area on the daily chart, you can see what's going on. Market deeply oversold, stands for the 4 sessions, mostly ignores the oversold. So it just shows you what the really selling pressure stands right now on the market. Market hasn't quite reached this target, and it will gravitate to this level. It usually happens when the market is just a few cents above the major target. That's why chances that we will get some reasonable bounce here today despite that we have nice thrusting action, all stands really very small. And so be extra careful if you will see the double repo pattern. It's really could fail. So other words speaking, the dealing with the long positions currently at this point in the current moment. So it's much better to do when the market will complete the target for the bulls and then starts watching for some pullbacks, some retracement levels. The same story for the bears. It would be better, much better to wait for a bounce and then consider taking a short position. At this moment, it's a situation not very attractive as for the bears as for the bulls. It always happens when the market stands strong oversold and very close to the very strong support area. But of course I can't forbid you, so if you will see some really pattern forming here, you could try if you trade on a 15-minute chart, for example, on hourly chart. It's possible.